I'd like to start towards the back of the report, page 46. And I just want to point out that over the past couple of years as we've been doing the audit, there's been some findings. But if you look at page 46, we had 4 findings carried over that were from the 2009 audit report. And you can see from that report there that everything was implemented except for the student activity finding, which we're going to repeat here, and I'll go over that in a little bit. Our purpose was to determine if your financial statements are fairly stated, and we give you opinions on them. And then this year, the district expended over $500,000 in federal assistance. So we conducted what is called a single audit. And with the single audit, we audit the federal programs, compliance, and controls. Now we also look at the district's overall compliance and controls, and then we talk about that in the audit report if we find anything of significance. I believe on page 6 is where we give the opinion. So on that page it says in the 3rd paragraph that the financial statements are fairly presented. That's the best that the district can achieve for the opinions, and it's called an unqualified opinion. Everything was fairly stated. The next paragraph down talks about a new GASB. Just pointing out that this was new, required for the district in 2010, and they did implement that GASB, which has to do with other post-employment benefits other than pensions.
What's GASB stand for?
Governmental Accounting Standards Board. And they put out the accounting requirements for school districts and local governments. On page 43, kind of jumping around. I'll point out the federal programs that we audited this year was the special education cluster, which included IDEA Part B, and then the ARA portion of the IDEA Part B, and then the state fiscal stabilization funds that came through, and those were ARA funded also. Now the stimulus funds, or what we call ARA funds, are what required the district this year to bump over that $500,000 limit and require the federal single audit act to be implemented. On page 44, I'm going to go over the finding that we have in this year's audit report. It has to do with internal control for student activity. Now the district has been working on implementing controls and procedures over the past couple of years, and these are pretty much a repeat from the prior audit reports. So need good controls over cash receipting, whether it's ticket taking or whether it's concessions and fundraisers. You want to indicate cash or checks on your receipts so that you can verify the cash and checks were the same that went into the bank as what was receipted. And then for the claims, we had some claims that didn't have adequate supporting documentation, and then the referees hadn't been documenting that they were signing a claim form that they worked a game and that they should be reimbursed for that that game. So we asked the district to implement some controls, and on the very last page of the audit report, you'll see that the district has responded to what they're doing to fix this finding. Our audit report was quite a bit later last year, so it was difficult to implement all this in 1 year when we come in at the end of the year. So I think this year strides have been made in the 2011 year, but I anticipate this finding will probably be implemented for the next fiscal year, the next audit.
I have one question.
Sure.
The referees signing when they pick up their check. Now, is that something, I know we had discussion about that, I think it was last year. Is that something that every school district requires of referees when they pay them?
Yeah.
Okay. So it's just a new...
It's basically any, you're going to issue a check or a warrant or any type of payment, you either need an invoice from that vendor or some kind of signed claim form saying you owe me money. Is what we're looking for, that control. Otherwise, could be issuing a check to anybody and maybe they didn't do the work. There's no proof.
Even though you
From the
have a list?
outside party, you know, that
Yeah,
I'm
okay.
looking
Even though
at.
there's a list, yeah, okay. All right.
You know, when I come in a year later,
Right.
how do I know
Right.
that really actually happened? I'll open up for any other questions that anybody might have. And we can go over all the financials if you'd like, footnotes. That's in the early part of the report. But if you're comfortable with it, we can move along.
You said the $500,000 from the federal
Mhm.
required another audit,
It's called a single audit.
single audit.
Yeah. And so what that requires is that we audit the federal programs for specific compliance and controls. And we choose, based on their guidance, what they provide to us, certain programs that we're gonna audit. And that ended up being the Part B in the fiscal stabilization funds this year. And so then the federal government also tells us what compliance requirements they want us to test, you know, whether it's spending the money properly, maintenance of effort for the IDEA programs. And they put out a compliance supplement that tells the auditor, these are the things we want you to look at. And then they don't have to come in, the federal government come in and audit each entity that gets money. So they created the single audit act. You have the regular audit, you spend over $500,000 in federal dollars, you fall under the single audit act. And whoever's doing your regular audit does your federal part.
So for example, when we take in federal funding, let's say for special education, and we receive those dollars in order to pay for some of our special ed programs, one of the things that was spoken about is maintenance of effort. If the following year we do not spend close to that same amount of money on the programs, then we get dinged with the fact that we did not maintain our effort, maintain services for our kids and take care of their needs. And so there is an issue right there where once we begin spending dollars, we take a look at, okay, how much can we spend and how much can we not spend? You know, it becomes kind of the equation you start working through, trying to balance out so that you stay within the requirements of when you originally accepted the money from the federal government. So you have different rules for the different entitlements that the federal government gives you, whether it's Title I or Title II dollars. I.e. for Title II, we fill out an application for professional development saying what our needs are. And if we do not, if we pay for a bill outside of what we said we were going to be spending that money on, then we're out of compliance with regard to those dollars being spent, and it will show up in a federal audit. So they will review the application for the money and how we've intended to spend that money, and then, you know, see whether or not we're actually doing what we said we were going to do.
But was this $500,000 a one-time deal? Is that the ARA fund?
Yeah, a
So
lot
that
of
only
it was
happens 1 year.
ARA monies. Right. We do receive other monies, for example, Title I monies and Title II monies. There are some entitlement monies that we do receive also.
Page 37 shows you that. It shows you all the federal dollars that
Okay.
were expended. And you'll see the biggest programs were the stabilization and the special ed, the ones that I audited.
Oh, I see.
And you're just over the 500,000. I anticipate this 2011 year will be the same, probably over 500,000, and then it'll drop back down because the stimulus funds won't be there. Unless something grand happens.
Yeah, so we used some stimulus money for like the handicap ramp to build it. So in order to use those monies, we had to fit within a certain project requirement of the ARA dollars. So we had to decide, okay, can we use these monies to build a handicap ramp? When it was determined that we could, then we went ahead and expended that. And audit should show that the monies were spent within the requirements of the federal monies under that audit.
And even during a regular audit, say we pulled a sample of claims and we saw it was for a federal grant, we would check that claim to make sure it was spent according to the grant document. But with the single audit, we specifically choose separate samples of just those major programs that we audit. So it gets a little bit deeper into the nuts and bolts of did we do it right or did we not? And obviously we did because we have no findings related to those.
Yeah, I have a question. I don't know if it's much of a question, but when we talk about retirement plans, like on page 23, what are you auditing, just to make sure that we're following, or that everything is within the state law? Or are you looking at, how does the district look like for maybe future years? And the reason I ask that is because, you hear about districts and states around the country that are having all kinds of issues by almost being overcommitted with stuff, with retirements. But does this audit or?
The state, the PRS and the TRS, the Public Employees Retirement Program and the Teachers Retirement Program, your employees are participating in those programs, and that's what we're talking about in Note 7. Those programs are audited at the state level, and there's a separate audit that's put out just specifically on those programs, and you can access that, I believe, on that website for those Montana PRS or TRS programs.
And what does that audit tell us,
It tells whether their net obligation, whether they're meeting it, whether they have enough money to fund all the retirements. All of that would be in that audit report. Our audit report just says that you're participating and just making it known, and then if you want more information, to go to their audit report.
Is it on here?
Yeah.
Okay.
There's a phone number and there's the address for both of those
Oh,
programs.
okay, it's not a website or anything you can go to.
No, but that would be a good idea. I think
Yeah.
I'll update the note for that, because that would make it simple. Now, the Note 8 is the other post-employment benefits that was implemented this year. This would be other than retirement, so like healthcare. If you provided healthcare to your retirees after and the district paid for it. And also, they wrote into this GASB that since Montana law requires you to allow retirees to stay on your plan until they're 65, if they're 55 years old, then there's what's called an implicit rate subsidy, meaning those retirees that are on the plan cost you more than your other employees, and so you're paying more